I only repeat over there debit and credit. That's it. So you must have the grip on rules for debit and credit. Here, cash to account receivable, right? Account receivable decrease 1,000. Write it on credit side.
So you just said though that it was on credit and you've just written it on debit. You said cash goes credit. I'm really confused.
Cash is coming in. Cash is debit. Account receivable.
Yeah, and you asked where does cash go? And we said debit, and you said no, it goes credit.
No, I asked where is the account receivable? Account receivable decrease mean?
Oh, wow. Sorry.
Account receivable decrease mean credit. Cash is inflow or cash is outflow. Cash is inflow. Inflow means positive. Positive mean debited. In assets, if asset is decreases, it goes to credit side. So account receivable is asset, it goes to credit side. Cash is being debit, it goes to debit side here. Everyone understand? So, Mirko.
Yeah.
Good. Now, 10th one. Sold land for cash at land cost 22,000. Which two accounts gonna hit?
Cash and land, sir.
Cash and land. Well done. So cash increase or cash decrease?
Increase,
Land increase or land increase or decrease?
decrease.
So what is the entry?
Cash to land.
Well done. Well done. Because asset increase mean debit. Asset decrease mean credit. So cash to land 22,000. 22,000. Cash increase. We already opened the land account. We already have the transaction number 2. And now decrease in asset is recorded on credit. 11. Declare and pay dividend 2,100 to stockholders. So declaration has no effect on, because no financial impact is going to be involved in the transaction. There is no transaction, but paid transaction is included here. So we talk about declare and paid because declare no cash is involved, but paid cash is involved. So when dividend is paid, what is the entry? What are the two accounts?
Cash and dividend.
Well done. Cash increase or decrease? It's paid.
Decrease. Decrease.
Decrease means credit. Dividend increase or decrease? Increase. So dividend increase means
Debit.
Debit.
well done. Dividend is a stockholder equity account. Dividend increase means debit. Why? Because it decreases the stockholder equity. That's why. So what is the entry? Dividend to
Cash.
cash. So you record it down. Cash is decreased. Credit side. Dividend here. Now balance. At the end of the month, we have a 30th or we have 11th. After that, we don't have any transaction, so we are going to balance. So what is the balance here for cash? So cash balance is like this. So you add all the stuff and then you want to find out which side is greater. You write down balance over there. So what is the debit side? So you add the debit side. Please add it. 50,000, 7,000 plus 1,000 plus 22,000. This is 80,000. So debit is 80,000. Credit is, we have 40,000. We have 2,700 plus 1,900 plus 2,100. So credit side is 46,700. So which side is greater, debit or credit?
Debit.
Is greater how much? 80,000 minus 46,700. Answer is, so debit side is greater than credit side. How much? 33,300. So you write down balance here, balance 33 here. Where this balance is coming from? Because debit side is greater than credit side. Liability side, what is the balance? So 37 is greater than 1,900. How much? So you write down credit side 1,800. Account receivable, 3,000 is greater than 1,000. How much? 2,000. So it is a debit balance here. So land 18,000 debit balance. So these are all the asset accounts. So we have written in a very nice way all the asset accounts so that we're going to confirm it whether these follow the accounting equation or not. You don't have to write necessarily this accounting equation. It's just to make sure that all this double entry system follows the accounting equation. So all the assets account, liabilities account, owner's equity account, retained earning accounts, common stock, retained earning accounts. Right? You see expenses. So sub accounts are rent expense, salary expense, utility expense. And at the end, everything would be equal. So if you want to find out how much the balance of cash, assets, 33 plus 2,000 plus 3,700 plus 18,000. So all are debited. So that's why we are adding it. And here liabilities, 1,800 plus 50,000 plus 10,000. Dividend is debit. So we call it negative. Similarly, expense negative. This is salary negative, 400 negative. So at the end, this follows the accounting equation. The crux is that it follows the accounting equation. So this is just, I already talked to you where this 33,300 coming from, where this 2,000 coming from. Which side is greater? You write down balance on that side. Simple. Now, illustration, I'm going to be opening the breakout room activity. All you need to do, generalize and post this entry. Okay? So, those who are watching online, I'm reading the illustration here. And please pause the video, try to do by yourself. And at the end, resume it and make sure to check your answers here. Okay, so we finished our breakout room activity. Let's start again. Okay, so let's discuss the solution here. So architect Wendy Lin purchased supplies on account 5,000. Later Wendy paid 1,400 on account. So they are saying that you need to generalize two entries. First of all, they purchase supplies on account. Supplies is assets, supply increase, accounts payable also increase. What is the entry?
Supplies to account payable.
Some write down supply. This is wrong. Supplies. Supplies mean tools, some kind of this kind of stuff which are consumed. For example, the printing papers, rubber, pencils, the office stationery. These are the supplies. Accounts payable. And the next entry is they paid 1,400 from them. Paid, which means cash decrease, and account payable also decrease. Outward the claim also decrease. So cash decrease, credit, accounts payable decrease, debit, right? Here we go. Supplies to account payable 5,000, 5,000. Accounts payable to cash 1,400, 1,400. So when you post it, it will be like this. So what is the balance here? How much you owe? The balance. Which side is greater? Of course, credit side is greater. How much? 36. How much you owe? How much is the outsider claim now? 3,600. This is how we derive. Okay, let's move on. So our second last objective is construct and use trial balance. So what is trial balance? So trial balance is rather going out for every books to find out their balance and make the accounting statements. So we make a statement, a balance statement, which shows all the balances of the account. Simple. A trial balance is it lists all the accounts. Rather, you have a pile of books here, the accounts you open, and you write down balance. Okay, when you are making the the balance sheet and you are opening every account. No, it's very hectic. This is not the statement. This is trial balance. Just a trial balance. A list of accounts. That's it. So how we make the trial balance? First of all, we write down assets, then we write down liabilities, and then at the end, stockholder equity. So if the account has a debit balance, you write down on the debit side. If for the credit side, you write down the credit side, and at the end, all the debit balance must be equal to credit balance, and then you know that there is no error. So usually it is prepared at the end of the period before making any income statements or any financial statements. It helps to facilitate the financial statements. Rather going, what is the net income? You go to net income, the account, and you open the book. So it's better to have one page on which all the balances are written. We call those page on all the balances are written. We call this trial balance. This is not the financial statement. This is just a list of accounts. So how trial balances are made? This is trial balance, company name. So title, first you write down all the asset accounts. So you see, according to their liquidity, current assets first, long-term assets here. And then liability accounts, payable, payable, payable. Unearned revenue is also liability. And then at the end, the common stock, retained earnings, and then you write it down, income statement account, revenue, and all the expenses here, right? So all at the end, all the debit must be equal to credit. So that's why it is balanced. That we call this trial balance. We call this trial balance worksheet rather than statement. Okay. So trial balance, we list all the account balance, and this balance is coming from the account of cash. This is debit balance, so here it must be written 800. So we just pick from the register of this the account of a cash and we write it down here. So this is just one page, or all the accounts are there. It helps us to make financial statements very easily. So first you need to make income statement. All the income statement accounts are here. Income statement is revenue minus expenses. So what is the revenue? Rather going to the register of revenue, just pick the amount from here. Revenue 7,000. Credit side, yes, normal balance is credit side. Revenue 7,000. Expenses, we have expense. Expense always has a debit side, 900. Salary expense is not here. Equipment depreciation is not here. So we have 9